the President and CEO of Envision Greater Fond du Lac. We are the Chamber of Commerce and Economic Development organization for all of Fond du Lac County, and we are very honored to have a few of SBA's leaders here today to share some insight, answer questions, and again, this is a really, really wonderful opportunity that SBA is sharing their time and resources with us. So we greatly appreciate that. Our office is recording the call, so we are going to be sharing this afterwards for maybe those who weren't able to join us live. These are important resources that we want to make sure all of our members have access to. So I am going to introduce and turn it over to Rob Scott. Rob is the SBA Region 5 Administrator, and he is going to give us some highlights of SBA. Welcome.
Well, thanks so much, Sadie, and thank you for the Envision Greater Fond du Lac for certainly hosting this and hosting the SBA team along with the USDA team to kind of talk about some exciting updates that we have, not only from policy positions from the Trump administration, but also some of our programmatic norms throughout the different departments. So obviously at the SBA, we were this little known agency about 9-10 months ago, and now everyone knows about us, whether it's good or bad. But I would like to say that overwhelmingly, we've done a lot of good out there. We are, certainly the PPP program is what you've heard, which is certainly what Congress passed and President Trump had implemented, where we pushed out $525 million, 5.2 million approved PPP loans throughout the country in the matter of a couple months. To kind of put that in perspective, we did more loans in those months than we did since our agency was created in 1953. So it's certainly a task that for our 4,000 employees across the country, it was a big lift, but certainly we could not have done it with some of our resource partners, certainly our lending community. We do have some great resource partners there in Wisconsin, and certainly some great lenders in Wisconsin too. So we're going through the PPP program. Obviously, we're in loan forgiveness right now. A lot of questions about loan forgiveness, and I know Eric will likely touch on this, the district director there in Wisconsin. So I don't want to steal a lot of his thunder, but just what I would like to underline is work with your lender when it comes to PPP. Another program, certainly as we're going through this pandemic, would be the Economic Injury Disaster Loan Program, which is the EIDL program, what is known for. It is still open, still able to certainly apply for it for those businesses that are still feeling the effects of the pandemic and need some economic assistance to kind of tap that cash flow if they need some more money for their business. Certainly the EIDL program is still available. Additionally, the SBA, we have traditional products that are still booming. We're coming off some historic months for our 504 program, and then certainly our traditional 7A program that is still available, whether it be an express line, cap line, or whatnot. If you are interested in any of these programs, I would highly suggest reaching out to the district office, either in Madison or Milwaukee. We are still picking up the phone. We're still answering emails. I know Eric, he's a tireless worker there in Wisconsin, working 7 days a week almost, certainly helping people get deals done in Wisconsin and helping small business thrive in the state of Wisconsin. Again, I don't want to steal anyone's thunder, but I would just like to thank all those that are certainly on the call and learn more about SBA. The one thing I say about the SBA is, yeah, we are government, and we are actually here to help you, unlike some other agencies that out there. And I'll say for my brothers from the USDA, we've been traveling up and down Wisconsin talking about rural America and the issues that are affecting rural America and rural Wisconsin when it comes to capital needs or whatever need it needs from a resource standpoint, whether it be before the pandemic or even during the pandemic and post-pandemic. Certainly we're working with the USDA and the SBA through a joint program that we kind of started this 2 years ago in my home state of Ohio, and we signed a memorandum of understanding. We're implementing it. and certainly pushing out the word about both of our programs there in rural Wisconsin. Ironically, I'm actually going to be back in Wisconsin tomorrow, spending several days there with the team, talking about manufacturing, talking about some of the things we're doing for rural Wisconsin, the dairy industry, doing some of the things that, items that President Trump has done, certainly the Administrator Carranza has done in order to help those small business owners and those farmers in Wisconsin. So with that, it comes with a great pleasure. I introduce our next speaker and transition the District Director for Wisconsin, Eric Ness. The one thing I always say about Eric is that he is a tireless advocate for Wisconsin. Now, what I will say about Eric is if only Wisconsin had a decent college football team, maybe you could have one up on me as an Ohio State Buckeye. So Eric, take it away.
Sounds good. Thanks, Rob. And hope we'll be probably seeing you in November again. From our SBA perspective, I think especially from the manufacturing perspective, and of course, I'm going over the last number of years at the looking at our SBA loans, manufacturing was always our top sector in dollars. And I think one of the things to remember is for in the two programs that are available, the 7A and 504, our stalwart programs with our microloan program. Of course, we have a microloan program with Advocap in Fond du Lac. But to remember, 7A has a maximum of $5 million, and that's for the maximum for a business. Remember, under 504, it's 5.5 million for manufacturing businesses, and that's per deal. So I have a number of manufacturers in Wisconsin that have 11 504 loans. And so basically the 504 can run 50, 40, 10, where your 5.5 million can come from the SBA. And the rates, are 3% or less on fixed for 25 years. So it's a wonderful opportunity for businesses to get very low fixed rate financings fixed for 25 years. And basically, like I said, you have an unlimited supply of dollars. It's just 5.5 million per deal. So with that, I'm just going to hand it back over to Sadie, and thanks a lot. And if you have any questions, please contact us. We're here to assist you.
Thank you, Rob and Eric. And with my past jobs, I have worked a lot with SBA. I've met Eric a lot. We are extremely lucky to have somebody as dedicated to Wisconsin, and you're always very responsive and willing to help. So absolutely appreciate all of your work that you have done and continue to do for Wisconsin. It's important. Next up is Wendell Davis. Wendell is the chair of the SBA Manufacturing Supply Chain Resiliency and Recovery Task Force. He's going to talk about Main Street lending and some other programs. And as for those who maybe don't know, Fond du Lac County is a very heavy manufacturing and agriculture industry. Supply chain is one of our top concerns and interests right now, and making sure that our manufacturers and our ag can get the supplies they need, but also on the flip side that they can get out the products after they make them. So welcome, Wendell.
Thank you, Sadie, for that introduction. And I got one eye on this program and one eye on the news that's coming out on the business channels. And, just hot off the press, it's a heck of a beat of, I wrote down durable good orders for October, and the number for capital business spending beat expectations. So those are two good things for manufacturers and specifically manufacturers in Wisconsin. And, we see all kinds of evidence of a V-shaped recovery. Nobody wants a long, drawn-out, 8-year-long recovery. We need to get that V-shaped recovery. We need policies in place that are going to support that. And the Atlanta Fed just predicted or estimated the other day that they're expecting a 30% rise in GDP. I think that's coming out on Thursday or Friday. We'll see what it is, but there's clearly, a massive V-shaped recovery that we're looking at. Now, with that being said, there's a heck of a lot of work to do. And there's a whole heck of a lot of policy that needs to support that V-shaped recovery. Sadie, if you'll permit me just a couple of minutes just to kind of put two markers in the ground. The first kind of deals where we are right here today and, where we've come, and starting with that first marker, it really all kind of hinges off and kind of plays off what Rob had talked about, and that's that $525 billion hit the balance sheets of small businesses across our nation through the PPP program. And when you look at the overall federal economic response, while COVID and the economic impact of COVID was unprecedented, this administration's response, and with the leadership of President Trump, the response has been equally unprecedented. When you overlay the PPP with and I know this is a double-edged sword, especially with manufacturers, and we can have that conversation, it's worth having. But when you overlay that with the unemployment insurance kicker, the extra $600 a week for a defined 8-week period, that helped. And and what's important about that is we opened up that program to small businesses and independent contractors. And so what we saw was when you combine those two efforts, it was a massive flooding of the zone of capital. And for example, in Connecticut, there were 60,000 recipients of PPP, but there were 50,000 small businesses and independent contractors that chose unemployment insurance over PPP. And that made sure the smallest of the small, was helped during this really difficult time. And again, when you overlay that with we're going to talk about the Main Street USA program through Treasury and the Defense Production Act, and that being administered through the Development Finance Corporation, that overall response was robust. And I think, perspective is important. And it's hard sometimes to get perspective during, an economic crisis. But the last economic crisis that our country faced, was the financial crisis back in 2008, 2009. And I think a lot of folks probably on this call remember, by the acronym, the program that was ushered out by the federal government. And that was the TARP, right? The TARP program, the Troubled Asset Relief Program. I was just listening to a business morning show the other day, and they mentioned that it took the federal government 13 months to usher out that program. And it represented about 6% of GDP. And when you look at the current response, it took weeks, not years, and it was robust. Secretary Mnuchin just the other day mentioned that it's over 20% of GDP. So our country was in an economic crisis. Our economy fell off a cliff, and the federal government reacted not only quickly, but in a robust manner. And that stabilized our economy, and that saved innumerable small businesses, if not millions of small businesses across our country and manufacturers across our country. With all that being said, there's a heck of a lot of work to do. We understand that. And part of the reason why we wanted, and we thank you, the Wisconsin manufacturing folks, Wade Goodsell put us in touch with you guys, Sadie, and we thank you, Sadie, and the Envision Greater Fond du Lac for getting out there and getting the word out and giving us the opportunity to talk about those resources as we go through this recovery together. And Rob touched about the SBA programs. I do want to add one thing on the SBA programs. As I was in Pennsylvania yesterday, I was in New York on Friday, I was in New Hampshire on Monday and Tuesday, and we're visiting manufacturing facilities, and we're doing calls like this. We have a national call tomorrow that we're doing on some of the programs that I have Emily Rapp from my office in the chat room, so she's going to post some of the materials that I'm going to talk about, Main Street USA and the Defense Production Act. And Emily, if you could add in there the link to the conference call that we're having tomorrow. Adam Blair's going to be on there. He is the counselor to Secretary Mnuchin. He's going to talk in detail about the Treasury programs. Also, we're going to have either David Glackham or Eric Jones from the Defense Production Act, the DFC that's administrating the Defense Production Act, and they're going to be talking in detail about that program. We're going to have some USDA folks also. So we're really trying to flood the zone, not with capital like the Trump administration did, but we're trying to flood the zone with information. And like some of these programs are niche programs, so it may not be applicable to you, but you may know a manufacturer that may need these programs. And I think it's important to have these conversations. And really, I just want to make sure everybody's aware of what the options are. So the one note on the EIDL program is that there is discussion as part of the new CARES Act that's being proposed. Again, these are proposals of increasing that EIDL loan, the EIDL loan from $150,000 to $2 million. So I know in my conversations with manufacturers, that $150,000 doesn't do a heck of a lot for manufacturers. And there's a part of the CARES Act, at least some of the bills I've seen, is increasing that to $2 million, which I think is much needed access to capital that manufacturers need. So I want to throw that out there because that may be something that's coming down the pike. Again, we were hoping it was going to happen pre-election. It seems there's a consensus that something's going to happen post-election, so keep an eye on that. With respect to the two programs that I just want to touch upon, the Main Street Treasury program, Main Street USA program, that is really gap financing. If you know of a manufacturer that is experiencing a liquidity gap and has work and has orders, but there's a liquidity crunch right here, right now because of COVID. It's not surprising that a lot of lenders are being conservative with lending. So this program is out there to get those lenders to help those manufacturers that have been impacted by COVID and that need desperately capital right now. Again, it's gap funding. It's a 5-year note. The first year, there's no principal and interest. That's deferred. The second year, the interest is deferred. So it's meant to give a manufacturer a runway, to get to the other side of this pandemic and the economic fallout from this pandemic. Details on that. If you want more information, Emily's posting some details on that. And again, there's going to be the call tomorrow and she's going to post that. The second thing I want to touch upon, again, I just kind of want to throw this out there. And if you have members that may be interested, Emily, if you put my email in the chat room, they can follow up with me directly. And if you have any issues, I kind of joke pre-pandemic, there were some lenders that didn't know how to spell the word SBA. So sometimes you got to find the right lender. So if you're a manufacturer that's facing a liquidity crunch and you're having difficulty finding a lender, reach out to me because we can touch base with the Treasury Department. And we can make sure that you're getting the proper connections that you need to have to get what you need. That second program, though, under the Defense Production Act, that's being administered by the the Development Finance Corporation. And those are loans, long-term loans, so 25, 30-year loans at a reasonable interest rate. The focus there is in part on industries and manufacturers that are impacted by COVID. And a big part of that focus is the reshoring of critical needs and infrastructure that are currently being produced overseas that really need to be produced in the United States. And the easiest examples deal with COVID directly, like ventilators and masks and gowns and different PPE that we need. However, that's not the only thing that they're focused in on. In fact, they've gotten so many of that, they really love to have projects that are outside of that. For example, Connecticut, we had a manufacturer that just applied, they were in the telecommunications industry. So they provide critical infrastructure and solutions to the federal government that other countries also provide. And they're putting a proposal in place to the DFC under the Defense Production Act to reshore, so to speak, some of those efforts. So those are services. It's not just manufacturing. There's services that can be reshored. And I want folks to kind of think outside the box. In another example too, the semiconductor industry, there were some folks that had been impacted by that. The supply chain had been impacted, and they want to reshore some of that supply chain. We had a ventilator company that 2 of the component parts of their ventilator was produced over, I believe, in India. The impact of COVID was such that India doesn't have the same healthcare system that we have, so their manufacturing supplier over in that area got shut down. That supply chain got broken and they needed those parts. So they're looking at reshoring those efforts and they're filing an application with the DFC. So any critical infrastructure, it's not just PPP, anything that you can think of that our country needs and should be producing here, that's a potential project that could be funded by the DFC through the Defense Production Act. The DFC is going to provide loans around 80% they're going to provide the 80% of the funding. They are looking, it's not a hard number, they are looking for a 20% participation. That can be with another lender. That could be an SBA loan with another lender. That could be private, private investment or other capital, but they are looking for that participation by the investor or by the company, the manufacturer. With that being said, the DFC can take an equity position in the company. So they do take equity positions, and you probably read some reports on that. If that's something, if you're looking to expand, if you're looking to reshore, and as a result of COVID, there may be an opportunity for folks to take a look at that. So those are kind of a summary of the SBA programs, the other two programs, the Treasury program and the DFC program, and be happy to either take questions on that in the chat room or field emails, or if there's any questions out loud, I'm happy to take calls. Thanks, Sadie.
I've got two questions for you. On EIDL, if that does get expanded from 150 to 2 million, will businesses who applied for the initial 150 be able to reapply for that gap?
Yeah, so until we see the legislation, until we see what's actually passed by Congress, so these are proposals, I can't definitively answer that question, but I will be yelling, kicking, screaming, and making sure that those folks that only got 150 are going to be able to access anything above 150. So in my travels, I've heard that loud and clear that the 150 just doesn't hit the mark. So that is absolutely, I've made people aware, and people are aware of that. They know that. So yes, I'm going to say yes, but I don't know that definitively until I actually see the legislation.
Okay, thank you. And then on the Defense Production Act, is there general guidelines of what that would support, or would a business or a manufacturer make their case to DFC?
Yeah, so we don't want folks. I don't want, like I talked to the folks over at the DFC. It's like we don't want to waste folks' time, right? If there's a project that makes sense, then let's do kind of a threshold. So I'm happy to put people in touch to just do a threshold question. Again, this is kind of a niche area, so we had reached out to accounting firms and law firms saying, hey, kind of poll your manufacturers. Is there anybody that would be interested in this? And what we're finding is each state, there's 10 to 12 companies that really have a perfect fit, and those people are submitting applications. So yeah, we can definitely shoot me an email. I'm looking, Emily put my email in the chat room. And so you can go online, and there's a link to the executive order that was passed about probably 60 days ago that defined it, and it is broadly defined. It does have to be a COVID relationship, but that can be something as simple as your supply chain or your component part was disrupted, in another country because it doesn't have, the same healthcare system that we have here. So it's very broadly interpreted, and I just saw the executive order go up in the chat room. So take a look at that, shoot me an email, and we'll go through that process with folks on an individual basis.
Perfect. One last question on that. Is there a list of, the top 20 of priorities that, if you make or if you produce this, we want to absolutely be in touch with you?
There is not. There is not, but there is like general categories as part of the materials that Emily's attaching. It is broad. So, anything, the minerals, any type of mineral that we produce, we rely upon China. Obviously anything that's being produced in China should be produced here. I mean, I would urge people to reach out to me, and we'll go over that one-on-one.
Okay. Thank you. Thank you again, Wendell. Next, I would have the pleasure of introducing Mike Fazio. He is the Export Finance Manager with the SBA Office of International Trade. Welcome.
Thank you, Sadie, and good morning, everyone. Thanks for having me participate in this. It's great to always be able to speak directly to a small business audience, and it's great to be on stage with my federal colleagues and local colleagues. I'm one of 21 SBA export finance managers spread across the U.S. I'm based in Chicago, and my job is to help small businesses in Illinois and Wisconsin to tap SBA's export loans to finance their export sales, their export business development, and their production capabilities. The great part about my job is helping small businesses to tap SBA loans to grow their sales through trade, through exporting. Now, we do know that over a third of all U.S. small business exporters find it harder to obtain financing for international sales than for domestic sales. We also know that small businesses could be forced to turn away business because they don't have the ability to scale up to meet large international orders. So we have 3 export loan guarantee programs that are helping businesses achieve roughly $2.3 billion in sales per year, and that's nationwide. So how do we do that? We partner with lenders to offer 3 different loan products, and these loan products address a range of business financing needs, not only for direct exporters, but also for what we call indirect exporters, who are those businesses who sell to other businesses that then export their products. So think about supply chain. There's been a lot of discussion about that this morning. So you may not be a direct exporter, but you might manufacture a component that you sell to another Wisconsin business, and then that Wisconsin business exports it to Canada or Mexico or anywhere else overseas. You may qualify for our program as an indirect exporter. So I'd like to talk specifically about each of the 3 programs. The first is our Export Express Loan Program, which allows access to capital quickly for businesses that need financing up to $500,000. And there's been a lot of talk about different loan programs and caps and whatnot. So I'll try to be as specific as possible when it comes to that. And here with the Export Express Loan Program, it is capped at $500,000, but it has a lot of flexibility for small businesses, and that's the intent of the program. You can apply for a line of credit prior to finalizing an export sale, or even before visiting a foreign market. Getting your financing lined up ensures that adequate financing is in place before you agree to contract terms. So as it comes to foreign sales, that's a big part of what Export Express can do for you on a smaller scale. But it can also be used for soft costs. It can be used for translation services. It can be used for due diligence in new markets. So just to give you an example, there's a small Wisconsin manufacturer that used the Export Express program with their lender just for some working capital. And it was only $150,000. And pre-COVID, to have a lender want to do a $150,000 loan related to exporting probably wouldn't happen without the Export Express Loan Program. So although it is the smallest of the 3 programs, it has a big impact. And I encourage you to check in with me and check in with your lender so we can talk about more about what it can do for you. The next program is a little bit bigger. It's up to $5 million, and it's the Export Working Capital Program. We call it EWCP in the acronym government and banking world. And small business exporters can use that to fulfill export orders and to finance international sales by providing revolving lines of credit of up to $5 million. It can also be used for transactional orders. So this is very helpful on a bigger scale to do exactly what the program says, help you with working capital to fulfill your export sales. And to give you an example of that, there's a customer that we have that has used it for 4 years now. It was renewed annually, and they started out as a $4 million user of the Export Working Capital Program. And just last year, they reduced it to $3 million. And at the SBA, we consider that a victory because that means that the company is growing and they're able to now use conventional financing to handle that capacity. So good news for the bank, good news for the small business exporter, and good news for SBA. The third program is the International Trade Loan Program. And that can help you if your company's been affected by foreign competition, it needs to retool or expand or to better compete. Basically, this is more of a fixed asset program. It can be used for permanent working capital, but if you need to expand your existing facility, if you need to build a new facility, if you need to buy some capital equipment that will help support your export sales or help you compete to foreign competition, that's the purpose of the International Trade Loan Program. And that also goes up to $5 million. A recent example we have of that one is a manufacturer that for many years has been leasing their facility from a landlord. And as they've been growing through using SBA's programs and increasing their export sales, they're now in a position to buy that facility. So they're using the International Trade Loan Program to buy the facility that they've been leasing for many years. So another great success story. The value of these loans is to provide small business exporters with a competitive edge as they seek out new customers and service their existing clients. So rather than requiring advance payments from overseas customers, you can offer payment terms to be more competitive with your foreign competitors. Rather than depleting your current resources, you can use the loans to proactively market and expand your capacity. And you can increase your company's ability to borrow by leveraging your foreign accounts receivable. Most lenders, due to regulations and due to their own internal policy, they won't consider foreign accounts receivable on the balance sheet as collateral. Well, by using the SBA's EWCP program, we can tap into that collateral. So if your bank currently doesn't offer these products, the 3 SBA export finance products, contact me directly, and I can introduce you to lenders that do use the products and aren't afraid to use them and use them very successfully. If you want to keep your relationship with your existing bank and they want to know more about the products, let's have a meeting with all 3 of us together, and I can give you all more details on how to use them to your advantage. So I will put my email in the chat box, but I'm sure you're going to be receiving all sorts of supplemental information. Reach out to me, whatever is best for you, and we can talk one-on-one on how I can help you use the 3 SBA export finance programs. And before I go, I do want to mention our state trade expansion program, more commonly known as STEP. This is a grant program that's run out of our headquarters office that we utilize with states and territories all over the U.S. The state of Wisconsin is a participant in this program. It's a federal grant matching program. So you wouldn't receive grant funds directly from the SBA, but what you would do is you would contact the Wisconsin Economic Development Corporation and tell them you're interested in STEP. And it's a wide-ranging program where federal funds and state funds are brought together to help you get trained up on exporting, to help you explore new markets, for you to go on trade visits. That's what it's typically been used for in the past, but with travel restrictions, it's not as frequently used. But anyway, I just wanted to make you aware of that. And if for some reason you get lost in the shuffle trying to track down information on STEP, don't be afraid to contact me directly, and I'd be happy to get you in touch with the right people and even give you a little bit more basic background on it. So thank you very much.
Thank you, Mike. Where does the XM Bank fit in with these programs that you just talked about?
Well, the Export-Import Bank of the United States is a separate federal agency. So they have their own loan guarantee programs, but they also are an insurer of foreign receivables. So if you use their credit insurance and you use SBA's guarantee programs, we work together as 2 separate agencies to help mitigate risk. So XM is a separate agency, but we do work together. We do partner together with our loan guarantee and insurance products to help small business exporters.
Okay, thank you. So you might be working with more than one agency for exporting and importing.
Yeah, and that's another thing too. If you want more information on XM itself, contact me. I'll be happy to introduce you to my counterparts over at XM, and it could be just a referral to them directly and they take it from there, or it could be a joint meeting, just like we would have a joint meeting with your lender if they're more interested in our products.
Great, thank you. Next, I'd like to introduce Justin Kirking. He is the Business Program Specialist with USDA Rural Development. Welcome, Justin.
Hey, good morning and welcome everybody. If you give me a moment, Sadie, I am going to try to share just a couple slides here to navigate our conversation. So it does indicate that the host has to give me permission to share my screen.
Permission granted.
Thank you very much.
Well, I'm saying that. I don't really know what it means.
Okay. It is still giving me, it says you've disabled my participation.
I haven't done anything.
Okay.
Maybe if I make you the co-host, you'll be able to.
Okay.
Are you able to share it now?
I am.
Okay.
All right. Well, good morning, and thank you everybody for being here today. Before I get started here with some remarks and maybe a little bit more of a micro focus on some of the tools that are available today for not only the manufacturing community, but other types of businesses. Just a couple opening comments here to dovetail off of some of the other presenters. Today, as we go through a few of these slides, there's a couple things that I think are important. Number one, the information in these programs that not only that I will talk about, but the other presenters have mentioned are very important. They're important for several reasons. Right now, these are unique times. Some businesses are doing very well and they're contemplating long-term investment strategies in their next expansion project. Other companies are working towards trying to navigate the current environment we are in. And so as I go through these two programs that I'll focus on today, keep in mind that as business leaders in your community, if one of these programs doesn't apply directly to your situation or the need that you're trying to address, please share this information. And likewise, in the short amount of time we have today, if you have follow-up questions that either that aren't answered today about these programs, I will be sure to put my contact information into the chat box, as well as they will be on a following slide. So today I plan to talk really about two programs. One is our Business and Industry Guaranteed Loan Program, and I will use the acronym B&I. But also we'll touch a little bit and talk about our B&I CARES Act program, or our Business and Industry CARES Act program, and how that program can be used not only by manufacturing companies in the Fond du Lac area, but also companies in rural areas across the country. So with that, I'll keep moving on here. My contact information is here. I do cover the state of Wisconsin. So if you have any follow-up questions, feel free to drop me an email, give me a call, and we can set up a time to walk through your particular situation or how these programs may benefit your business. A little bit, or what I would call our flagship program here is called the Business and Industry Guaranteed Loan Program. Here at USDA, we've administered this program since 1972. And this program is really designed to partner with the lending community with generally historically has had a focus on financing of fixed assets really on a long-term basis. This program, generally we've seen things such as purchase real estate improvements, machinery and equipment, as well as debt refinance. So the program is very flexible in terms of the types of projects and businesses that we're involved with. But one of the critical pieces of all of our programs here at Rural Development, as is in our name, is every one of our projects has an element of eligible rural area. And in this particular case, we define for these programs that we're talking about today, we define as less than 50,000, not contiguous to an urbanized area. So in the case of Fond du Lac County, all of Fond du Lac County is eligible for these programs. So they're directly applicable to the attendees or participants here on the call. The program, again, has a very broad lender pool in terms of who's eligible to apply. Here in the state of Wisconsin, we're very fortunate that we have a group of lenders here in the state who are very familiar with government guaranteed financing, not only the programs that we administer here at Rural Development, but also the programs that are administered by our partners at the Small Business Administration. So really, what do we provide? We're the credit enhancement to support private credit that a lender would provide to a business. You will see here our loan limits. We guarantee loans up to $25 million, and we would provide a lender an 80% guarantee against loss. You'll see here there are some fees associated with accessing these programs. And hopefully, when you look at your particular situation or the need that the business has, hopefully there's some tangible benefits to the business as well in terms of being able to establish on the balance sheet some patient debt structure that provides a longer amortization term that really allows the company to self-fund some of your either future capital expenditure needs and or working capital needs that the company may have. The other piece that we'll talk about is eligible borrowers. You will see here, our programs are slightly unique in the fact that we have a much broader eligibility pool in terms of who can actually borrow money and receive a guaranteed loan under this program. There is a list there, but one of the things that is unique about our program is that there are no small business size standards for the business and industry guaranteed loan, as well as there are no tests for credit. I believe Rob earlier mentioned the memorandum of understanding that has been signed by SBA as well as USDA at the national level. And it's very important as I work with the lending community and companies here in the state of Wisconsin, that if we have a conversation and there's a better loan product out there that would meet your needs of the business, there's a mechanism there for us to be able to coordinate and collaborate to be able to make sure that at the end of the day, the lender as well as the business utilize the program that best meets their needs. So from a practical standpoint, our eligible borrowers who can receive a guaranteed loan under these programs is very broad. And I know one of the things here to talk about is some of the industries here that we observe with this program. And here's just kind of a highlight of some of the types of projects or businesses that we've been involved with. And there's one thing that you will note as you go through this list is that here in the state of Wisconsin, we're very fortunate that we have a lot of rural-based manufacturing. And these are some of the industries. And the reason for our rural-based manufacturing and USDA support of that is the rural manufacturing tends to be where the company employs technical trade people and or highly educated people, where there's a lot of usually job creation, capital investment, improvement of local real estate tax base for the municipalities. And so over the course of the last 8 to 12 years, there's been a really big focus in terms of supporting the manufacturing sector in rural parts of the state. Here's a real example of a project that was completed. This is the Viroqua Food Cooperative. And you can see here, we partnered with a local lending institution in the southwest part of the state of Wisconsin to work with them on an expansion project to effectively double the size or the physical footprint of their building. Being part of the Department of Agriculture, local and regional food systems and projects are very important. And these are the types of projects that not only anchor downtown development in rural areas, but also directly support our agricultural community by aggregating and actually selling locally or regionally produced food product. And here's a little bit different project here that is not in the manufacturing space. This would be a hotel. And this particular project here is in northern Wisconsin. It is very important for several reasons. There was a need for a hotel, but also it demonstrates a lot of legwork and planning that went into it, not only at the borrower level, but also at the community level. This particular community where this property is located had identified a section or an area of the town that was blighted. And the community was able to support this project by putting forth a local incentive package to help cover some of the infrastructure and development costs to address the blight that was present in this downtown community. So here's just another example of a slightly different project that we have done here in the state of Wisconsin. If you want additional information regarding the Business and Industry Guaranteed Loan Program, there's a couple ways you can do it. I previously provided my phone number as well as my email address, and there's also a website, which you see there, that would provide you some additional detail regarding the basics of the program. But please, if you do have questions, feel free to reach out and we will address your questions as quickly as we can. So we just talked a little bit about, the long-term investment piece and our role here at USDA in terms of providing credit enhancements to a lender, really to facilitate that patient capital. I'm going to transition a little bit and talk about another program that came out of the CARES Act that Congress passed at the end of March, called the Business and Industry CARES Act Guaranteed Loan Program, or I'll use the acronym B&I CARES Act. When Congress passed the CARES Act, they appropriated about $20.5 million of budget authority to the program, really designed to be administered as a guaranteed loan program to help businesses prepare, respond, and recover from the COVID pandemic. That $20.5 million appropriation supports a program level of approximately $1 billion of guarantee authority that will be available until it's expended or until September of 2021, whichever comes first. So in the previous slides, when I talked about the B&I Guaranteed Loan Program, it was heavily focused on fixed assets. Because of the unique nature and the unprecedented environment that we are in, the B&I program, the traditional B&I program, has been modified really to make this program available to the companies that were had the greatest impact from the COVID. And the primary difference here is that B&I CARES Act loans are limited only to working capital purposes, which is a contrast to our traditional B&I program that's dealing with long-term investment, fixed asset financing. CARES Act loans are specifically for working capital purposes. So what does that look like? We partner with, again, financial institutions and lenders, and we provide guarantees against loss at a rate of 90% on all loans up to $25 million. And again, you will note the fee structure here has been reduced to make the program more accessible and affordable for not only the lenders, but also the borrowers. So I mentioned a little bit about some of the changes that were necessary to facilitate this. And I'm going to start on the left side of the screen here and work down, and then I'll do the right column. In the first bullet point is that these loans are strictly for working capital purposes to help businesses prepare, respond, and recover from the pandemic. You can see here some of the eligible costs. This is not an inclusive list. Payroll costs, health benefits, as well as regularly scheduled principal and interest payments on scheduled debt. That is one of the big changes that was made in terms of the working capital piece. We've also been able to increase the percentage of guarantee to 90%. That's really to help take a transaction or a company that's been impacted by the pandemic and being able to de-risk that transaction. So hopefully at the end of the day, your existing lender or a new lender could get comfortable in providing these working capital funds to you as the business. On the left column, the last bullet point, we have also expanded our eligible loan purposes. Under the traditional B&I loan, generally speaking, ag production has been excluded, or there was a very small window where we could do some direct ag production. But the B&I CARES Act program does allow for ag producers to be able to access working capital funds under this program if they are no longer eligible for the FSA guaranteed loan program. So from that standpoint, when we talk about some of the changes, the big one being right now is their working capital purposes only, as well as ag production, manufacturing, as well as a host of other industries that are present in the Fond du Lac area are eligible for this program. On the right side here, before I hit my time limit, I'll talk a little bit about some of the modifications to the loan terms and some of the changes that were made to the program, really to be able to make it workable for the borrowers. In the first one you'll see here on the right-hand side of your screen is we were able to modify the loan terms. And so these are 10-year multiple disbursement term loans. And we've built in the mechanisms here because each business has been impacted in unique ways to allow for up to 12 months of principal and interest or deferrals of principal for up to 12 months. Deferral of principal for up to 36 months and interest for up to 12 months. Likewise, we've modified the capital and equity requirement to make so that there's alternative ways. The biggest one that we have seen here in the state of Wisconsin is we now have the ability, or we have the ability to use previously received COVID-related assistance that a borrower has received. Could be a PPP loan, it could be an EIDL loan, or it could be a CFAP payment that an ag producer has received through the Farm Service Agency. To be able to capture those dollars and be able to use it as the mechanism to meet the capital or equity requirement for the program. And then the last piece here is from a collateral perspective. B&I CARES Act loans, lenders are not required to discount collateral. So really being able to use this program as supplemental financing, either to what they have or what they have received, really to fill that void that where a lender normally wouldn't lend, we have the ability to do that, and the lender is not required to discount the collateral. So I guess in summary here, as we look forward into some questions, there's two distinct programs. One is focused on the long-term investment in fixed assets, as well as we have a tool where manufacturing companies and ag producers and other industries, there's a mechanism to work with your current lender or a new lender, really to provide those working capital dollars that will be critical to address the issues that were caused by the pandemic and really reestablish the business on a successful basis going forward. So with that, Sadie, I will stop, and if there's questions, I can answer them.
Thank you, Justin. That is a great partnership between SBA and USDA. I think often, especially in Wisconsin with a lot of rural areas, you're a natural fit for both businesses. So thank you. If there's any general questions, specific questions, I know we've got a small group, but if anybody wants to ask anything, feel free to just unmute. And if there aren't, just one closing question I would have for the SBA folks on the line is, again, I've worked a lot with SBA in my past life, and now with Envision Greater Fond du Lac, we have a great relationship with SBA. Why should businesses choose or work with SBA?
Sadie, I can start out, and Eric, you can probably jump in. You're Mr. Wisconsin out there, so you know your businesses far better than I do. But, ultimately, I don't care where they get the resources. I just want to make sure they're aware of resources, manufacturers. So if there's some states have better programs, and if there's a state program that's a better fit, then, I just want to make sure that folks are aware of everything. So, Justin just talked about the B&I program and the CARES Act modifications. I mean, that's a really good program, and that may be better fit for some of our than our SBA programs. I would just emphasize with the SBA, if there's another round of PPP, that really truly is a grant disguised as a loan. So as long as you use it for its purposes, which is pretty broad now, that's a grant. So obviously, everybody likes grants, and the economic fallout from this pandemic wasn't caused by any manufacturer on this call. So, that grant component I think is critically important. I would also emphasize that the EIDL loan, 150 and under is a long-term 30-year note. It's a low fixed rate, and it's non-recourse debt up to that 150. And a lot of folks don't realize that, and that doesn't get emphasized, but that's not in the conventional marketplace to have non-recourse debt. So I would emphasize those two things on PPP and EIDL. And I tell you, I know Mike is on too. When I look at the Office of International Trade and their programs, to me, those are uniquely situated for manufacturers. And so take a double look at Mike's programs, because they really are, in my view, manufacturing focused. Thanks, Eddie. Eric, do you have anything to add to that?
Well, when I typically talk about SBA, it's really about cash flow. It's terms, and typically on working capital, a local lender can do 4 to 5 years on working capital. We can go out 7 to 10 years. That cash flow is king in that as you grow your business, cash is a big need, and so that I think is a really important factor. One thing interesting, and we don't know going forward if there's going to be some other modifications, but for everybody who had an SBA loan that was closed before September 27th, they got 6 months of their loans paid. And so I had talked to hundreds of businesses who said, hey, I wish I had an SBA loan, because I would have loved to have had access to that 6 months of getting your loan paid. I mean, not only was we would defer also, but we actually made the payments for 6 months. That was an amazing program. Not talked a lot about, but every small business that I talked to who had access, and that was for our Express, our micro loan program, our 504 program, and our 7A program, they all were very, very, very grateful for that program. And going forward, will that happen again? We don't know. But it was a great opportunity for those small businesses. And also, it's a way for, if you're working with a smaller lender and you're running close to their capital where they can lend, SBA can continue to have you work with that community lender that you've chosen to work with, because our guarantee doesn't go against their lending limits. So those are just some of the factors. And I always think it's great. We see some businesses who say, well, I can get my money elsewhere. It's always, I think, better to do a commercial loan and think of your business more as a cash flow business, because I think an SBA allows you to do that. And frankly, the rates on the 504 programs, the fixed rates are amazing. And I think fixing those for 20 to 25 years is going to be very advantageous for a small business.
Sadie, that's a great point by Eric. Our 504 program, notwithstanding the pandemic and the economic impact of that, is up year over year from last year. So our 504 program, there are rates sub 3 out there for a fixed rate on that 40% of the SBA portion of it. That's an amazing product. And anybody that's expanding, and Eric, that's eligible for refinances too, right? You can refinance through our 504. That's an amazing program that is a rock star right now, even in this crisis.
I'd just like to quickly add from the export finance point of view in our international trade group, why I work with SBA, because it goes deeper than just SBA. So somebody had a question earlier about XM Bank. So you can come through SBA to work with us directly, or to work in conjunction with another agency like XM to give you a better understanding up front of what it's like or what you need in order to work with them. And then also at our headquarters office, we have a policy team. So for example, they'd be able to help you navigate with the USMCA. And not just directly from an SBA point of view, but they collaborate with folks from the U.S. Commercial Service and the Department of Commerce to help all businesses understand the changes to the USMCA and how that's a big advantage now, especially for a lot of Wisconsin businesses over the old NAFTA that had been in place. So working with SBA is great directly, but it also goes a little bit deeper than just SBA itself.
Thank you. Thank you all. You know, we are so honored to have all of you with us today. I was furiously scribbling notes so that we can share this with our members. There's a lot of people I think that could benefit from some more of these programs, and then just looking forward with supply chain. Wendell, you know, you talked about it, and again, that is really one of our focuses in the next 12 to 18 months is having one-on-ones with our manufacturers to talk about supply chains. So very happy to hear that, you know, SBA is focusing on that, and we can look to you for help and guidance as well. And if there's no questions, we can close it early. And we have all of your contact information. I expect you'll be getting a lot of follow-up out of our office for sure.
That's good.
Thanks, Sadie. That was great. And for the record, I've put a lock on calls over 50 minutes in my office, so this is late. I have Zoom fatigue.
I hear you.
Get it in and get it over, and then follow up, right? So anything that you guys have for follow up, feel free to reach out to me.
Great. Thank you all again. We really appreciate it. Like I had stated, we did record this, so thank you, Tracy Qualman in our office, for organizing and coordinating this with Emily. We'll be sure to share this, and then also now that we have our cheat sheet of programs, we'll be able to work with our local banks and businesses to get the word out too. So we really appreciate it.
Good.
Well, enjoy the rest of your day. Thank you all.